Hello and welcome to the Digital Assets Report. I'm Jane King at the New York Stock Exchange. This is brought to you by SCN Corporate Connect. And with me today, Vincent Molinari, CEO of Liquid M Capital. So welcome back.
Thanks, good morning, Jane.
We've had a few ICOs already that have taken place, but the rules weren't totally in place yet when those happened. So what happens to them?
Well, it's really a great concern for us, and I think it's part education and messaging. I think when we look at the SEC's 21A report, or the Dow report, the investigative report in late July, clearly came out and said the Dow was indeed a security. They're not going to take enforcement. But if instruments look like a rate of return, aggregating a capital, have a third party manager or promoter, they're a security pursuant to the Howey test. That was the warning shot. So we have kind of what I say is pre-investigative report and post-investigative report, and what does that mean to the marketplace?
Okay, so, and we've had what? How many ICOs? I mean, they've just raised millions and millions and millions of dollars, hundreds of millions.
I think if we framed it in 2014-ish, there was about 300 million in aggregated capital. So far this year, in 2017, slightly over 3 billion.
Exploded this year. I mean,
Tremendous.
I hadn't really heard of ICOs until this year. So, but they may not be in total compliance when the laws get written. So what happens? Is there like an amnesty program or what?
It's a great way to frame it, Jane. And I think, look, if we're very aware of the SEC's messaging, we had the Dow report in late July. I think there was 2 or 3 investor bulletins that came out from the SEC about pump and dumps, celebrities being involved, kind of be careful.
Right.
I think the most meaningful comments were perhaps Chair Clayton's last week or 10 days ago, where he came out in a conference and said he hasn't effectively seen an ICO that didn't meet the hallmark of being a security. Well, that dovetails back into what we spoke about last week, I believe, and the token report that came out. 228 tokens examined, and only 20 of them, or 8%, would deem to be a utility token. That's very consistent with Chair Clayton's comments. That's about 92% of them deemed to be securities. So what we call is the unintended consequence of the Dow report. What happens now? So those utility tokens were believed to be utility at the time before the Dow report. Now they're being guided pretty strongly that they're securities. So loosely defined, the exchanges who have been trading those and creating liquidity are delisting them so they can't transact anymore. Folks like ourselves at either Liquid M Capital with our alternative trading system can't trade them because they are not set up as a security. So you have this unintended consequence where you have tens of thousands, representing perhaps hundreds of millions of dollars of investor capital that's now stuck.
Yeah, so the investors are the ones that are kind of left holding the bag here. So what should they do?
Well,
wait?
I don't know that they have a choice, and we have met with the SEC. We put a letter forward, Chris Pallotta, the CEO of Templum, and myself, to advocate for the space and for the investors to say, SEC, can we put a program together, we're calling it a remediation program, to say, effectively, we didn't have enough guidance, the folks in the industry pre-Dow report, hold up your hand and say, sorry, we got this wrong. You're probably going to have to offer a right of rescission to your investors. As long as there's no bad actors or fraud, then let's repackage that, take a reset, and put that into a security framework. Reg A plus, or Reg D, or even Reg S, or some combination, so that they're right set, right? And now we can then have liquidity for those investors on an alternative trading system, and a bit saves the day for the investors because they really become victimized in the process unintentionally.
Sure, I mean, they probably thought, I'm an early adapter, I'm going to try this new method, and then, you know, here they are.
Unfortunately, it's been a very fluid process. And many of the early entrants believed, and in good faith, that they weren't conducting a securities business. And we'll just leave the bad actors out of that equation. Let's say the bulk of this has been naivety or lack of clarity on what the securities laws really meant. And now that we have that, everybody going forward should certainly be doing it right, but we think there needs to be an industry-wide amnesty, remediation, an ability for 6 months to hold up your hand and say, we got this wrong, we'd like to fix it, and how do we go through that?
So what should a company who is going through the ICO process or an investor considering buying the tokens in an ICO, what should they do at this point?
And that's the question of the day, or the week or the month for that matter. And I think it's really about regulatory frameworks for us. Is this a security? If this is a security, is it being sold through a regulated entity, a broker-dealer, licensed people, so that there's levels of due diligence that's been done, anti-money laundering, know your customer provisions, and that by itself gives a level of investor protection that there's been a level of fiduciary responsibility performed. And then, if it is indeed a security, will it have secondary liquidity? And can that be done on an alternative trading system like Liquid M Capital or Liquidity M? And we think the secondary liquidity aspect is really a hallmark of investor protection.
Okay, and it's a space to, if you're interested in this, just keep a close eye on it because it's moving so quickly, and making sure that you get involved when there's some more clarity to what exactly your investment is and how you can get.
It's early days, Jane, and a lot of people are saying a day in the world of blockchain or ICOs is like a month in ordinary. It's moving that quickly. So it's early days, so it's for, in a lot of cases, speculative investment. So investors should be aware that if you're not willing to take a high degree of risk, this is probably not a space for you to be investing in.
At least not at this point.
Not today.
So, okay, thank you so much, Vince, for being here. Vince Molinari, the CEO of Liquid M Capital, and thank you as well for joining us on the Digital Assets Report, brought to you by SCN Corporate Connect. I'm Jane King at the New York Stock Exchange. Have a great day.
Connect.